market commentary for the 29th of January 2020. Tuesday saw a reversal of much of Monday's moves on the premise that no news is good news, while Wednesday's focus would be on the FOMC rate announcement. The day began with traders still focused on coronavirus developments. This began with President Trump announcing that US airlines would potentially cease flying to China due to the ongoing issues. And in the UK, British Airways announced they would also temporarily suspend all flights to China. While Chinese equity markets remain closed for the new year, the Hang Seng did reopen, dropping more than 2.8% on the day. For FX, the day will begin with a slow unwind of Tuesday's moves. Euro yen would dip back to 120, and dollar yen back to 109. Euro dollar would slowly drift from 110.25 down to 109.95. The price action this week has been inconclusive, to say the least. The markets are pushing both sides, trying to find the path of least resistance. Maybe the FOMC rate announcement will get us going. But before that, we had the Wall Street Open, and on the back of stellar earnings from Apple, equities got off to a solid start with the Dow Jones up 180 points. But then came US pending home sales for December, which saw a record low number as supply dried up. Maybe not the best reason to sell equities, but shortly thereafter stocks drop, with the Dow Jones barely remaining in positive territory, while both the S&P and Nasdaq turned red. But that was as far as we would go, and before Europe headed for the doors, the Dow Jones was back up 140 points. Despite the equity moves, FX decided to wait things out until the FOMC announced at 2 p.m. Eastern Standard Time. Euro dollar continued to trade between 109.95 and 110.10, and dollar yen between 108.95 and 109.15. The Fed announcement comes and goes with rates unchanged as expected. The statement reaffirms the Fed's commitment to higher inflation. Nothing new there. The press conference can often produce more volatility than the actual announcement. Today would be no exception, although it was hardly fireworks. One dovish comment about bill purchases had the dollar slipping lower, with euro dollar briefly back up to 110.20 and dollar yen down to 109. Gold would benefit, running from 1568 up to 1577. And equities once again head lower, even with Apple trading at record highs. By the Wall Street close, the Dow Jones and Nasdaq are up by less than 0.1%, the S&P down by less than 0.1%. If you're looking for some conclusive direction today, you didn't get it. Familiar ranges continue, but maybe a break is around the corner, he says, hopefully. For Thursday, it will be all eyes on the Bank of England rate decision. Let's see how that brings. For a technical standpoint, well, as per yesterday's commentary, gold did indeed get some constructive price action. So let's see if that continues. But for today, a very simple look at the current setup for Eurodollar. For the past few sessions, we've been bouncing around the 110 level, and as you can see from this hourly chart, it is this low at 109.80 back in November, which has caught traders' eyes. Will we test it? Will it hold, or will it just drift back higher? There are plenty of ways to play it, so find the one that suits you best. If we do start to see squeeze higher, interim resistance is going to be at this 110.40 level, and then followed by 110.65.70 area, which acted as strong support, stretching back to early December of 2019. With that, I hope you all had a good day, and look forward to speaking with you tomorrow. Cheers.